All right, so welcome into the live stream today. We're going to be having a special guest diving into the global macro effect around how this will affect not only investing, but long-term wealth accumulation and what that might look like. And we'll take a very close look at the US dollar, what the future of that might be, where Bitcoin plays into all that good stuff. I think you're going to like this conversation. My name is Paul Barron. Welcome back into Tech Path. Before we get started, I want to thank our sponsor, that is Bybit. If you guys are looking at doing something with zero trading fees right now, on all spot pairs, they are now celebrating 10 million users over on Bybit. So make sure and check out our link below. It'll take you into Bybit around now, where you'll be able to do some spot pairs with zero fees. So kind of a cool aspect if you're looking at developing a new trading platform. Take a look there. It helps the channel out. Let's get into it today. I want to introduce a friend, and also he's been on our show a couple of times, and that is Mr. Mark Moss, coming over from the Mark Moss YouTube channel, but also under Market Disruptors. And he does a lot around the market in general. Mark, great to have you back on the show.
Yeah, thanks, Paul. Always a pleasure to be here. Excited for this.
Yeah, it's going to be good. If you guys are not subscribed right now, I want to just show you his YouTube channel. Let's get Mark up to 400,000 subs. We're going to get
Come on,
him past
by the end of the
us.
year. I'm trying to get there.
and I know the market right now, in terms of just when we look at it, you know, the amount of subs in our channel has slowed, obviously, for obvious reasons. The market is in severe distress right now. But anyway, check out Mark's YouTube channel. We'll leave a link below.
But that's why people need to be tuned in now more than ever, right? I mean, it's a dangerous time, but
totally with you.
But it can be a huge opportunity if you know what you're doing. So tune in.
It's the thing that I have often said in business is, if you're going to where the puck is, it's the old Gretzky analogy. If you're going where the puck is, you're too late. You've got to go where the puck will be, and that only way you get there is ahead, and in some cases moving a little earlier than most people are comfortable with, because that's usually the big scenario, is they just aren't comfortable with taking those big kinds of risks. I want to jump over to talk about risk. I want to jump over to a tweet you had right here. I'm going to zoom in on it. Like going to Vegas, playing roulette, and putting chips on every single number. This was in reference to O'Leary saying, hey, I'm going to kind of diversify across a lot of different altcoins, different kind of technologies that O'Leary likes to call these tokens. What's your angle on this? Because obviously this is a bit of a knock on going with the crowd of diversification. I'm a proponent of diversification. Where do you play this out in your investing strategy?
Well, I think specifically I couldn't really see that tweet, but didn't he say he'd put it across like 30 different cryptocurrencies or something like that?
Yeah, he says own positions on 32 different coins
32.
and tokens. Yeah.
So let's talk about diversification. So we always want to manage our risk. We're in a dangerous situation. The world is very dangerous right now. So we want to manage our risk. We do that through a couple of ways. And first of all, always manage your risk, right? So Warren Buffett says the first rule of investing is to never lose money. The second rule is don't forget number one. Of course, we'll lose, but the goal is to manage our risk. And so most people get in thinking about how much they can make. Professional investors think about their downside. And so there's the rule of diversification. We can manage our risk through allocations. Don't put all your money into real estate, or don't put all your money into stocks. So you allocate across different asset classes. 2, you diversify within those asset classes. So instead of just one stock, I might buy different stocks in different different types of markets. Instead of buying one piece of real estate, I might buy different types of real estate: commercial, residential, multifamily, different parts of the country, different countries as well. And then finally, within those positions, we can use stops. So back to the situation that he said. So Warren Buffett might say to put all your eggs in one basket and just watch that basket really well.
Yeah.
And so I think there's truth to diversification. I diversify in those ways I've just said, through allocations, right? Some in real estate, some in stocks, some in businesses. And then within those, I also diversify. But I think there's also too much diversification. And I think one of the big problems that people have, specifically to the point that Kevin O'Leary is talking about, is 30 positions inside of cryptocurrency is not diversification.
Right.
All of that is basically one allocation. And so a lot of problems that people make is like, oh, this one cryptocurrency went up, I'm going to take profit, I'm going to put it in this cryptocurrency, and all their money's in cryptocurrency. They're diversified across 30 positions like him. There's no diversification. As we've seen, the entire market cap is moving up and down equally.
Right. Well, I think the scenario with Kevin's point is, when he looks at diversification, we know he's in, early stage businesses, obviously his real estate holdings, all those kind of scenarios. I think his play was going in the direction of where crypto is and his diversification within that asset class. And I look at it, and there has been times when I've had, especially in the bull run, when I've had a lot of tokens at play, and you're trying to play the market. It's kind of structured gambling. But at the same time, there are classifications now within crypto that I do like, whether it's a handful of altcoins. I look at layer one. I'm kind of hedging my bet on both Ethereum and Bitcoin, which obviously are my two biggest holdings. But it is something that I still kind of lean into to a certain extent. But at the same time, right now, Bitcoin, ETH, those are really kind of where I'm playing the bigger plays with just making small moves and usually short time moves within some of these altcoins, because that's exactly to your point. The market
I think it
is kind of
depends on what you're
moving that way.
trying to do, right? So, in order to really be successful and skate to where the puck is going to be, you really have to have some good knowledge of what's going on. And you
Hmm.
can't have good knowledge on 30 or 40 or 60 different
Yes.
assets. And
Yeah.
so, like, you really need to understand what it is that you're doing and where you want to put your time. They say busy means lack of priorities. And so, you really need to prioritize where you're going to put your time. And you just can't do that over 30 or 40 assets. The other thing I'd say is back to what you're trying to do. So you mentioned you like, people like to play these altcoins and it's like a way of gambling. That's what you said. And that's exactly what it is. If you look at any crypto asset out there, there's never been one that's made a second all-time high priced in Bitcoin.
Yeah.
And so what that means is that, sure, if over short periods of time, over this week or over this month, certain assets will outperform others within this short period of time. If you want to play a long game, so Michael
Hmm.
Saylor talks about his view on Bitcoin as 10 years. I talk
Right.
about it on 5 years. I started as a real estate investor. From the time I would buy a piece of property, the time I could go through the city, rezone it, build it, it was about a 5 year project. So I look at like things over 5 years. I'm not looking at things in months. And so if you want to gamble around to the point that you made, sure, you can play those things. And if you want to have a longer term perspective, let's say that you're focused on your business. I'm really trying to scale my business, and I need to put some money on the side where I think it can do good. Then maybe you don't want to gamble around and try to catch these weekly, monthly pumps, and you just go long term. So it depends on what you're trying to do.
Yeah, I look at the 1 year chart on Bitcoin, obviously down, I think it was 58% or so, which again, when I talk to many people and I do some local coaching with, high net worth individuals, and it's mostly about just getting into Bitcoin for the very first time. This is the thing that they're just trying to bridge across the traditional asset space into what's happening here. And many of them get
Right.
into, well, and they completely understand the market position as it is right now, because most of them have securities. They've been in stocks most of their lives. They understand how much wealth they have lost in the last 18 months. So they're really starting to look at this in a different way. And I think it is definitely, to your point, it's diversification in a new kind of paradigm of how you need to prep for the future, which I think is a big one. I want to talk about the U.S. dollar. So big things happening right now when you think about the global aspect of let's just take Italy. We have a new premier, a female, very what would be considered right wing, definitely in a position right now that is really kind of starting to change the dynamic within Europe, which obviously affects the EU or the euro. And obviously, we've seen the pressures on the pound. The dollar's been soaring. If you follow the Dixie, even though we have had some kind of setbacks to a certain bank, or I should say adjustments. And you had a tweet right here that I want to get into it. And it says, Fiat economists get it wrong over and over, but the system still props them up. Ending fiat will bring back an age of accountability and responsibility. So, do you think we're getting into the point where some countries, some country leaders are starting to recognize this from their own internal aspect and are really starting to reconsider the monetary position overall globally?
Boy, that's a big question. I would say, are some leaders seeing this? And I would say, for the most part, no. And so you mentioned Maloney that got elected as the PM there in Italy,
Hmm.
and
Yep.
is she right wing? And I saw her speech that went viral. I think I
Very
reposted it on
passionate.
Twitter. I thought it was great, very passionate. I think there's this war on truth, and so we saw President Bukele from El Salvador. He wrote
Yep.
this article, this op-ed on Bitcoin, talking about this war on truth. She's talking about the war on truth. She said swords will be drawn, basically to defend truth. And so we're seeing that. However, back to the question of the dollar and accountability, she seems very strong, or right wing, as people would call it, on trying to kind of maintain identity, family, traditional
Right.
values. But I mean, come on, she's not focusing on the debt. Italy's going to keep printing money. She has no plan on the deficit. So in the globalist agenda, as far as money printing and control there, I don't think she's going to make a big dent in that.
Hmm.
So back to the kind of question that you said, are any leaders really focused on this? And I would say, unfortunately, and this is probably going to go the wrong way on your channel, but maybe Putin is the only one. And so
I
Putin
don't. I
has
don't
come
think
out.
people would say that as the wrong way, because we've talked about Putin in a position. Well, I still think that he's playing 4D chess, in a position of trying to better Russia's situation monetarily, and he may be doing it through things like right now these chess moves. We'll call them wars, but
Yeah.
the point is
Well,
quite different for
he
sure.
said he had a quote, and I used it in a slide presentation at Nomad Capitalist a week ago. I forget exactly, but he said something to the effect that the age of imaginary wealth is over.
Mm. Yeah.
And now it's about real wealth. And what he's talking about is the imaginary wealth is the fiat money system that
Yep.
financializes things, creates wealth out of nowhere. But now we're finding out through Europe specifically that
Mm.
we need energy and we need food. And that's what he's talking about, the real wealth. So Europe has, they don't have this big financial fiat monetary system, but what they do have is natural gas. They do have
Yep.
oil. They do produce food. And what he's saying is that the age of this fiat is over. And now the system is moving. And of course, we're seeing this in the markets, right? So the markets have been
Hmm.
rotating from growth into value, commodities,
Right.
things like that since January, maybe of November last year, really January of this year. And I think it's just starting back up again right now. And so he might be the only global leader that's focused on this specifically. Maybe China, obviously China and Russia are trying to kind of get together on this new BRICS monetary system they're putting
Right.
together. They're trying to create an LBMA competitor. And so they're focusing on this real type of money, a hard type of money, as opposed to this fake imaginary fiat money.
Well, I think you're exactly right. Commodity power, especially when you look at just resources and the power of what Russia has been able to establish just globally. I mean, they are in essence one of the most resource-rich trading partners out there. Obviously, that's going to
Right.
play into this as we start to see a lot of pressure within a lot of these currencies that are really starting to struggle, including the euro and the pound. Obviously, the dollar is in a little different dynamic. And I've talked to a couple of analysts here recently that says really this skyrocketing dollar is actually bad for the United States in international trade and continues to put a lot of pressure on that, which obviously is going to affect how the overall markets will respond here stateside, which gets into everything we saw from the 900-point rally yesterday on the Nasdaq, all the way
Yeah.
into what we see right now with Bitcoin, which has actually started to stabilize within that. Now, I look at that as a potential, back to your point of getting away from imaginary money or imaginary wealth. This may be a good time where we do start to see a true, not necessarily shift, but at least an alternative global reserve. And whatever that might
Yep.
be, if it's Bitcoin, if it's the Chinese digital yuan, or if we start to see more movement into that. Again, that gets back into diversification, which I think is a good thing from an international investor. Imagine if you were playing gold in euros. We were talking about this with Gareth yesterday, and you'd be just ridiculously up right now if you were looking at gold as the asset class
Sure.
for that.
Yeah.
But
And,
with
and
all that being said, does that mean when you look at the dollar, does it mean that we could see that in our lifetime where the dollar truly starts to shift away and we see a digital currency come to power?
It already has. So let me back that up, right? So it already has. So what we're witnessing is a process. It's not an event. It's a
Yep.
process. I found that quote. The quote was, "The economy of imaginary wealth is being replaced by the economy." He's talking about economies of real hard
Yeah.
assets. That was the quote. But back to the kind of point that you're making, I think there's a couple things people have to change the way they look at things. So first of all, nobody wants money. What do you mean, Mark? Of course, I want a bunch of money. No, you don't. What you want is the things that money buys you. And so you'll park it in money temporarily until you find out what it is that you want: a new car, a vacation, a dinner, etc. And so we want that. And so we have to understand that money is only a medium of exchange that allows us to get those things. And so ultimately, we don't want the money, we want the things. And so we're always trying to think about things in terms of purchasing power. And we use the dollar. I mean, we're both in the United States, so we use the dollar as our unit of account. If you're over in Europe, you're using a euro potentially as a unit of account. And so, to the point that Gareth is making, if you were using euro as a unit of account, you've done really
Yeah.
well.
Yeah.
You've made more euros. Great. Good job. You've made more euros, but those more euros still buy you less of the gasoline, the energy
Hmm.
for your house, airline tickets. It buys you less of the things that you really want. So even though you made more euros, those more euros buy you less things. Now, on the dollar, we're also seeing the same thing. And so we'll kind of get into this. I think you'll probably want to talk about this, but we're seeing currencies are collapsing. One interesting thing that we're seeing, and I don't know if we're going to talk about it, but everyone's looking at Credit Suisse. They're going to blow up. Look at the CDS swap, right? And what happens is
Right.
generals fight the last war. And so, hey, we were attacked on the south flank last time. Let's reinforce the south flank this time. But now the attack comes from the north, and so everyone's still thinking we're going to have a housing crisis and a banking crisis, and I just don't think that's the case. We're having a sovereign debt crisis. That's what's happening. And so we're seeing the smaller currencies, the Sri Lankas, the Lebanons, the Turkeys, those currencies are blowing up. The next level is going to be it's going to be Greece, it's going to be the Italies, it's going to be that level. Eventually, it's going to be the Japans and the Germanys, and then the dollar will be the last man standing. It's all
Hmm.
going to pile up to the dollar. It's this dollar milkshake theory, like Brent Johnson talks about.
Right.
But the thing that we have to keep in mind is back to the purchasing power, back to where I started. So the dollar can continue getting stronger, but still buy us less goods. A perfect
Right.
example of this is the Turkish lira has lost 85% to the US dollar over the last 5 years. Right. So if I had a time machine, if I was in Turkey and I had a time machine, I go back to Turkey, I'd want to get out of the lira and move into dollars. And
Mhm.
a better option would be to borrow as much in the lira as I could, knowing it would be devalued. But what about the dollar? The dollar is getting stronger, right? The DXY is getting stronger. Well, as a matter of
Mhm.
fact, in the same 5-year period, the dollar's lost 65% to the S&P 500. The dollar's lost 48% to the median real estate home price in the US just since January of 2021. So the
Right.
dollar's also crashing, and we're witnessing it in real time. People just don't realize it because they're only using it as their unit of account.
Yeah, I was looking at the Dixie here. You look at this is February, mid-February through what we're seeing really kind of late September before we started to see the fall. But that was a 19% move here on the dollar. So again, this in comparison, if you think about just inflation in general, definitely something that I think, to your point, the milkshake theory, we've talked about that here on our show before, and definitely believe that that is a scenario that is happening. And back to your point, which I think is brilliant, is that we're experiencing a process, not an event. And I
Mhm.
totally agree with that. This is something we got, here in the crypto pit, our team, our researchers, we're constantly debating these kind of things. And this is one of the things that I stated before the show. I won't say exactly what it was, but the point is one of the biggest bad actors of all financial instruments is not anything that's ever been done in crypto. It's only the US dollar. And we're already starting to see this play out now. So it is kind of an interesting fact, to your point, is how this all
Yeah.
comes up to the last man standing. Is
And
this
and to
something
the
though?
process,
Yeah,
when
go
when
ahead.
the dollar took over the reserve currency status from the pound sterling, that was a 40-year
Hmm.
process. It wasn't
Yep.
like, oh, here it is. It was like a 40-year process that happened. Also, that was 100 years ago, and the pound sterling is still here being used today. As a matter of
Right.
fact, the
Right.
BOE just bailed it out, right? So it was a 40-year process before that kind of switch happened, and it's still around today. So when we're looking at the dollar, the death of the dollar, things like this, I think we just continue to see the dollar lose relevance. It continues to be used less and less and less as trade and for reserve status. Um, and it's probably still going to be around for a long time. Now, when you talk about the reserve currency, there's two things. There's a reserve currency and there's a medium of exchange currency. And so most people, I would imagine you, don't actually store your wealth in dollars, right? Most people store their wealth in real estate, in stocks, and things like that. Now, sovereigns They have the reserve, right? So they got hundreds of billions of dollars. Where do they park those? And so there's really nowhere else to park those hundreds of billions of dollars right now. The yuan does not have a functioning financial system.
Right.
The ruble does not have a functioning financial system to have this reserve classification. Now, the medium of exchange currency, that could change, right? We could use whatever we want. So we kind of have to look at it from two different ways. But either way, I think it's already, we can see again, 65% to the S&P 500. The dollar's already, the process is already slipping pretty fast.
Hmm. Yeah, and if you look at, because this is something that I'm trying to put my head around, because this is something that comes up often in many conversations around when will Bitcoin really try to make, or it be in a position where it could make the move toward a potential alternative, true alternative for a reserve, and especially in the essence of where you could start storing a lot more sovereign wealth assets today, meaning US dollars, out of your bank accounts into whether it's Bitcoin or other digital stables, things of that nature. And it could
Sure.
could be happening very soon. The question I have is how long? Because here, if you look at the Bitcoin chart, this is kind of something interesting. This is the year to date, and some pretty big numbers here. I mean, we've seen some pretty significant falls right here. Year to date, we're right there at almost 60%, obviously down from even the previous high there. And even within that, this top line trend that we were tracking is starting to actually get broken through because it was creating a little bit of a mini wedge right here. Let me kind of zone in on that right there. We are now at that point where this wedge is actually starting to see a little bit of an overperformance here with Bitcoin. Do you think we could be in a little bit of a run here with Bitcoin, especially with kind of the macro pressure that we're seeing from the rest of the world in the dollar situation?
Yeah. So the macro pressure is the last thing that you said. I think that's the most relevant. And
Mhm.
so really the macro picture is in the driver's seat. If the stock market, if the S&P 500 drops another 50% from here, which a lot of analysts think it could, like Jeremy Grantham,
Yep.
one of the best investors in
Yep.
the world, he thinks it could drop another 50% from here. If that happens, I would expect Bitcoin to crash again.
Sure.
Is that going to happen? We don't know. Now, the reason why we're starting to see this tide shift is because of exactly what's happening with the Bank of England having to be bailed out. The ECB is
Yep.
on the brink of being having to be bailed out. The UN just told the Fed they need to stop raising rates because they're crushing
Hmm.
emerging markets around the world. And I think I was having this debate, a conversation with another analyst friend that I was talking to this morning, and I said, "Look, the Fed is telling us they're going to stay strong. The Fed
Hmm.
tells us they're going to crush the markets to crush inflation, crush demand, right? But we all know that they're not going to be able to do that. We know that
Yeah.
because they are going to be forced to pivot. We know that." And he's like, "But Mark, you know that because you study monetary history." He's like, "You're a Bitcoin guy. You get that." He's like, "Most 30, 35-year-old people on Wall Street, they have no idea about that. And so they
Yeah.
don't understand that." So back to the question, because of what happened in the BOE, because of what's about to happen with the ECB, the European Central Bank, um, we know that the Fed is pretty much stuck. They probably have one more rate increase in front of them, and then it's most
Hmm.
likely done. As far as like a pivot, everyone's waiting for the pivot. Maybe it doesn't happen until next year, but just the fact that they lower and then pause is enough for these risk-on
Right.
assets to catch a bid. I think there's a good probability, below 50%, but a good probability, in my opinion, that the market doesn't break down 50% and continues to hold its trend line that we've been on since 2008. If
Hmm.
that happens, then I would expect Bitcoin to continue catching a bid and continue going up from here. We know that anytime Bitcoin is below its 200 moving day average, it's been a
Hmm.
historical buying opportunity. And so we're seeing that reflected. But again, back to the point that you made, the big macro pictures in the driver's seat. If Credit Suisse were to blow up and drag the entire market off a cliff and the S&P drops 50%, then Bitcoin will drop as well. But for the most part,
Sure.
I think it's a good chance it holds up and Bitcoin continues going up from here.
Well, and the argument I always make is that with Bitcoin, you're getting into an asset that's probably going to overcorrect when the market does pivot, and in essence, get in a position where it does start to take a flyer,
Yeah.
and most likely would move more aggressively in the upward trends, especially in some of the markets. I think when you look at the emerging markets and how we will see the because I don't think anybody's going to want to be in this position. It's like 2008 when it happened. Everybody started backing away for certain aspects of the market very quickly.
Mhm.
The wounds were too fresh, and I think that was different then because it was mostly the United States, even though it did cause some effects globally. It's nothing like what we're facing today. What we're facing today truly is a global condition.
Let me go back to something else you said, if I can, back to the timing. When will this happen? You asked. Well,
Yeah.
I think I have a pretty good read. Let's talk about that. You
Okay.
mentioned earlier the Gretzky quote. Get to where the puck is going to be. So where is the puck going to be? Well, I think it's pretty obvious. The fiat currencies are dying. Putin said it. We see it
Yeah.
happening. The dollar is getting stronger, but still lost 60% to the S&P 500, right? So we see what's happening. Now, we only move when we have enough pain. I believe in chiropractic. I've been going most of my life. I fundamentally believe in it, but I typically only go when I'm in pain. So the greater the pain is, the more likely I am to act. Now, if you live in New York City and you go down to, you're in Manhattan and you go to the bar and order a $20 martini, you don't care about the US dollar. What do you mean it's unstable? I don't even know what you're talking
Mhm.
about. Why do I need a replacement? If you're living in Zimbabwe or
Yeah.
Lebanon, or
Huge.
North Korea, you care big time. And you don't care how volatile it is, it's better than what you have. So, what we're seeing is all the growth is happening in emerging markets. Now,
Yeah.
you've asked about this kind of this shift, and let's talk about it. I think we have a time frame for this to happen. So, a couple things that we would do. First of all, Bitcoin has been kind of taken over by Wall Street over the last couple of years. It's their new trading toy. All right.
Yeah.
They're trading it like this new trading toy, like it's a tech stock. And because of the amount that they control, it's been moving like a tech stock. The thing is, it's not. And as investors, we're trying to skate to where the puck is going to be. How do we know where it's
Mhm.
going to be? We're looking for something called a mismatch, the difference in perception and reality. The
Right.
perception is that Wall Street thinks it's a tech stock, a risk asset. The reality is that it's not. The reality is that it's actually something different. And what we're seeing in emerging markets, they're using it as a lifeboat. As a matter of fact, in Africa, 80% of all Bitcoin transactions are happening there in denominations under $1,000.
Mm.
So
Interesting.
not Wall Street doing $10 million moves. Transactions under $1,000, 80% of them are happening in Africa. So what we're seeing is as these emerging markets go down, as we talked about, it starts on the small countries and it works its way up. Already with the BOE, with the move they did last week, we saw massive flows going into Bitcoin. When your
Right.
currency's crashing, you're looking for a lifeboat, and gold sold out. There was no physical gold in the UK, and Bitcoin. So they both pumped. But right now it's happening in the smaller markets, the Perus, the Ecuadors, the Paraguays, the Brazils, the
Mhm.
Colombias, the Lebanons. I mean, Lebanon, they're breaking into their banks to get their own money out, right?
Yeah.
They're going into Bitcoin. So we're seeing it. And eventually this flip flops. Now, when does that happen, Paul? Well, I think we have an idea. So, what we
Mm.
would use in technology is we're looking for adoption cycles, and we use something called an S curve. And the S curve tells us how long we should get adoption. Typically, about 80% adoption is considered full adoption. So, the
Right.
time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90. So, it took about 10 years. Bitcoin reached about a 10% adoption by 2019. That tells us by 2029 or by the end of the decade, we should be at full adoption. If you look at the rate of fiat currencies collapsing
Yeah.
and you look at the rise of Bitcoin, I think that's when it happens. Now, I said Saylor has this 10-year time frame. I think
Yeah.
of things in 5-year time frames. Charlie Munger, Warren Buffett's partner, said the big money is not made in the buying and the selling. The
Yeah.
big money's made in the waiting, he said.
Yeah.
So you get in early, you allow it to develop over a 5 or 10 year time frame, and you have the trade of your life, but you don't
Yeah.
trade it daily or weekly or monthly. You just kind of wait for it.
Yeah. And I think this goes back to the point of, I think the problem we have in society right now is this instant gratification, the scenarios
Yeah,
we've seen with the millennials that now I don't want to put that on millennials only. Listen, I'm a Gen X guy. I have instant gratification, but
we all
I
do.
do
We all do.
I get it. But the point I
Yeah.
think when you look at, really building lifelong wealth, adding a zero to your net worth, kind of that next level, we're in that time right now in which, most people have not got a chance to live and they're getting a chance to see it up close and personal. So much so, you've got things like this going on, which is now we have senators introducing a bill saying, I mean, can you imagine that you have to introduce a bill that has to protect cash against
Yeah.
the CBDC? So that's the concern I have, is if we do truly see digital currencies through central banks, how will that play into the competitiveness within the Bitcoin? Because I'm concerned, like, hey, all right, maybe it's to a certain extent that the central banks have figured out, oh crap, we're in a position right now. Fiat is dead. Now we realize that we've got to go to a digital monetary system. just to be able to keep up with this rising tide within Bitcoin. What would that look like in that 10-year, that same 10-year cycle if CBDCs continue to accelerate in possible creation?
Yeah, I think first of all, through your and I's outlets that we have, I think we need to kind of continue to push this education and go. Think of the insanity that the
Of just
people that are
replay,
responsible for the
yeah, letting
collapse
them
and
get a
the
second
of the
chance. Yeah,
yeah, like let's just give them controllers. I think that's insanity. But I think to your point, a CBDC is no different than what we have now. It's just more surveillance, more control. But as far
right.
as it's still a fiat system, it's still fiat money. Now, yes, we have cash. You were talking about this bill to protect cash, I think. Over 80% of all transactions are already done digitally. And I don't want to
Right.
lose cash, but the truth is, and I hate to admit it publicly, but the truth is I hardly ever use cash. I use my
Yeah.
debit card, my credit card. We do wire transfers. I do digital payments. And so everything's already digital. So whether they go from a digital dollar that we have now to a CBDC digital dollar, like what's the difference? It doesn't change anything other than the amount of control and surveillance they'll have on us. Now, to the point that you're saying, I love that we have at least some politicians trying to slow this down. We saw all the way back in January, Congressman Tom Emmer from Minnesota introduced a
Yep.
bill prohibiting the Federal Reserve from issuing a central bank digital currency. Ted Cruz has come out, signed on top of that. He just put forth another bill, I think, this week, saying that he wants to introduce legislation to prohibit the Federal Reserve from using it for surveillance.
Hmm.
So they're trying to slow this down, but I think. Back to the reality, if we peel the onion, the reality is that a CBDC is no different from the fiat system that we have today. It does nothing to fix the monetary system, fix the inflation problems that we have today. It's only worse, not better.
Yeah, you look at that today versus 5 years ago, the difference in the percentage of cash being used, back to your point, is that it has truly gone to a digital system today. Even if you go to a bank today and try to withdraw more than $10,000 in cash, which is an
Yeah,
IRS,
good luck.
you know, flag at that point, but just getting that done is very difficult. However, what's interesting to me is moving larger amounts of cash now into digital assets, completely free movement. Granted, there are certain aspects around that that are being looked at, but in the long term, I think it does represent an opportunity for people to really start to get into those safe havens. So I'm in that position. What do you make of Swift, this quick, I should say, this Swift move that they're trying to now actually get on the blockchain bandwagon here? Do you think this says anything, or have they kind of said, okay, maybe there is something here that we need to pay attention to?
I think it's a little bit ridiculous for most people to look at that and think anything encouraging by that. And I would I push back on people when they tell me, oh, Ripple's going to be the new system that allows banks to send money. I say, great. Can you tell me what software the banks use today to send money? Oh, you don't know? Then why do you care if they upgrade their database? Since when do you care if a bank upgrades whatever software they use in their computers? You don't care. I don't care. Now, granted, that could make the banks more efficient, and sure, that saves them money, I suppose. Great. So then I guess they make more profits. So maybe I should buy bank stocks because I think they'll be more profitable if they can have efficiency in their software. But other than that, so what? Like, I don't care what software they use. I don't care what POS systems, merchants use, et cetera. So if Swift were to upgrade its software and the way it sends messaging, I just don't really see what impact that has on me as an individual or as an investor.
Well, I think that in many cases, what people look at is what are those short-term plays that you can make, which are typical of any markets out there, whether you're working in securities, over on stocks, or you're even looking at certain aspects around altcoins. There are short-term plays you can make, and you can do great on them. You can also
Sure,
lose
sure.
a
So
lot.
like
Sure.
if I knew Wells Fargo was going to move on to Salesforce CRM, for example,
Yeah.
well then maybe I should buy Salesforce because the stock might go up in it
Hmm.
potentially, I guess, right? Or like I said, if I believe Wells Fargo could really cut their expenses because of greater efficiencies, then maybe I buy the bank stocks. So maybe there's
Yeah.
some plays like that. But overall, I think at the end of the day, I hope what most people realize is that what Bitcoin's doing is eliminating them completely. So
Right.
that's cool that I could still drive in my car to my bank and fill out a wire transfer thing by paper and have the banker put it in, and then it goes across Swift. That's easier for them now. That's cool. Or I could just send it on Bitcoin right now as I'm talking to you. I don't need to go to the bank or use Swift. So
Exactly.
I
Yeah.
think ultimately that's the revolution that we're here for. Not banks upgrading their software.
Mark, I want to talk a little bit about mobile, and then there's a topic from Robert Kiyosaki that he stated that I thought was very interesting. But when you look at mobile and the growth of where this is going, this is the mobile user statistics now around smartphones, penetration by country, and there's one is that we've seen this massive move in the number of smartphones and the number of mobile phones estimated out to go out to 2025. Again,
Yeah.
6.6 billion. So it's pretty much at critical mass. Obviously, it has been for years. Does
Yep.
this play into the potential of Bitcoin even being in a better position because of the innate ability of mobile devices becoming possibly a wallet in the future?
Yeah, it certainly does. It certainly does. And so, if you look at technology, back to those S curves we talked about, I saw on that chart it said 83% adoption. So, at about
Right.
80% is kind of
Yep.
considered full adoption. And what you see is that each technology adopts faster and faster and faster, and that's because it can build on the previous technology. But one thing is that we're also looking for technology to be easier and faster to adopt because there's less barriers, there's less friction there. And so,
Mhm.
in the United States, we were able to get the internet pretty quickly because we already had telephone lines, and we used
Right.
telephone lines to get the internet. What we saw is in these emerging markets, in the Africas, et cetera, they leapfrogged, skipped over the wired networks and went straight to wireless.
Yeah.
And so we saw way faster adoption there. If we look at that and we also look at the existing system that we have today of the dollar being a payment network, that's really what the dollar is. It's a technology that allows us to move money anywhere in the world, like really, really fast. At least in old terms, it's faster than sending gold. It's not faster than sending Bitcoin today over the Lightning Network. But basically, it's this payment network that allows us to move money. The problem is a couple things. One, it's still an old network, so we still have the Swift system that you're talking about. It still take days or weeks to settle this money to get final settlement. But on top of it, there's a lot of friction there. So about half the people in the world today are not able to get into the global financial system because they don't have permission. They don't have
Yeah.
permission to join. So they talk about these CBDCs and they'll be all more inclusive. No, they won't, because the same people won't have permission to join, just like they don't have permission to join today. And so what we're
Sure.
seeing in these emerging markets, like I've been working with the people in El Salvador, a lot of people in El Salvador don't have bank accounts there because they're not able to get them. They can't afford them. And so they're
Mhm.
not able to join the global financial system. And now they can download, to your point, on their phone, download a Bitcoin wallet and instantly be into the global financial system. And so what I believe happens, the emerging markets, as I already made the case, the emerging markets will lead the way because that's where the pain is high enough. And so they're the ones that are rapidly adopting this, as I mentioned, in Africa, sub-Saharan Africa, where 80% of transactions are already being done there. And so, yes, they're going to leapfrog past the existing financial system into the new financial system, just like they leapfrog into the internet age past the wired networks that we had before. And so I expect them to lead the way, and I expect it to happen pretty rapidly.
Well, I think, the other point that you could look at is the escalation of wireless networks and the escalation of mobile devices. Had you been
Yeah,
investing in some of those technologies, you would be in a pretty good position right now, overall in
sure.
terms of overall performance. Last point I want to
Yeah.
make,
And then
and
of
then we'll
course
get
we'll just throw out shout out to Elon Musk and the Starlink. That's
sure,
really going to scale this up even
that's
faster.
going to
I've been
shift
using
things.
one down in Mexico. We travel around with it. We set it up anywhere and boom, we have internet. It's pretty amazing. So that's really going to escalate this even faster in these markets.
Yeah. Robert Kiyosaki, we've tried to get him on the show a couple of times. I know you're a friend of him. Hopefully you can
Yeah.
connect me. But Robert talks about U.S. dollar following the English pound. He believes it will. He thinks that it's going to crash in early 2023 after the Fed pivots. With the point
Mhm.
of the Fed pivoting, and when we say pivot, meaning that we just get off the train of increased interest rates, which will start to adjust. Why would we see a full retracement of the dollar once that occurs? What do you think he's talking about here?
I think there's a nuance to this. And so, what I think most people don't understand is they're looking for a crash. And when they
Mhm.
think of a crash, they think of asset prices dropping so far that I can't afford to live anymore, right? I've lost so much money, I can't afford to live, I've lost my job, et cetera. But there's also an inflationary crash. And I think that's what we're facing. And so, an
Right.
inflationary crash is also the same, where I'm not able to live or maintain my quality of life. But instead of assets dropping, it's because things went up so fast. And so when I can't speak for him, and yes, he is a pretty good friend of mine now. But what I would say is that I see is that yes, the dollar is crashing, but it's crashing up, not down. And so it's
Mm.
a Zimbabwe experience where
Right, right.
the Zimbabwe dollar was pegged 1 to 1 with the U.S. dollar, but then it started going up, 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 up. All of a sudden, everybody in Zimbabwe was a billionaire. Everyone's a billionaire, but it
Mhm.
was 350 billion Zimbabwe dollars for one egg. And so
Yeah.
I think the dollar will crash to the point he's making, but it's going to crash up and not down.
Hmm. Okay. Interesting stuff. I want to get to our poll today, and then we'll take a
Because
couple of
because
questions.
because of what he said, because of the pivot, right? So if this
Right. Yes, exactly.
hypothetical, I don't want to call it hypothetical pivot. I think
It's going
it's
to happen.
when, not if. And so
Yep.
when it happens, they're going to create so much more money. It's going to push the price of everything up again. And I think
Right.
most people want that. They're tired of seeing Bitcoin or their cryptocurrencies or their stocks going down. So they're wishing for the pivot. I say be careful what you wish for because you're going to get it.
Yeah.
And they're going to get the
Yeah.
pivot. Things are going to go up so fast. You're going to think you're getting rich, but it's actually while you're getting rich, it's going to be still harder and harder to survive. And so
Yeah.
the
You're getting
key
submarine.
goal for everyone and your listeners is how do I beat that rise of inflation? How do I beat it and not
Right.
keep up with it?
Yeah, for sure. And I think everybody that's watching our show, you guys know how deep we are into digital assets, Bitcoin, obviously some of the things you guys love here on the channel as well. Let's jump into the poll and then we'll take a couple of questions here. All right, let's see. Will the U.S. Be a cashless society in our lifetime? Yes, CBDC will replace. Everybody's kind of pushing in that way. Yes, Bitcoin, only 14%. Yes, other digital currencies, and then no paper cash is still going to hold. So, wow,
Mm.
everybody is kind of leaning in on this. They're drinking the Kool-Aid here a little bit on the CBDC side, which I'm worried about, in essence, but I often will go the opposite and say, I think there's probably going to be a Bitcoin play here for sure
I think
in the
we'll have
near
both.
future.
I think
Yeah.
I don't know where our lifetime is. The next 50 years. Will cash be gone in the next 50 years? There's a above average chance. I think we could see physical cash disappear. I think we
Yeah.
have CBDCs and Bitcoin. I think they both kind of coexist.
Here's a couple of questions coming in from Hill Dog. What about a CBDC backed by Bitcoin, where Bitcoin is the gold, and incentivize U.S. mining and innovation? I don't think they'll ever
Mhm.
do that, but that would be
So
a
I
good
think
one.
that whole backed by, people need to kind of think through what that means. What does that mean, backed by? So when I had gold was money for 5,000 years. I put it in the bank. They gave me a gold certificate, a paper claim, an IOU. Said
Mhm.
that if I gave you that IOU, you could go claim that gold. That paper
Right.
claim was backed by gold. But what's gold backed by? Gold's
Gold.
not backed by anything. Gold's
Yeah.
just gold, right? And so the whole backed by signifies debt. So we needed, because we didn't have technology enough. So in order to get gold to have velocity, where I could send it to you right now in your studio,
Hmm.
in
Yep.
order to get that velocity, I had to add debt on top of it.
Yeah.
Bitcoin is the first technological revolution we have where we have an asset that can achieve full velocity without adding
Out
debt.
dead.
So I don't think we'll
Yeah.
need to back anything again like we used to.
Yeah, for sure. Let's go here with a couple of Ethereum had a chance before proof of stake. What is your thought on Ethereum and its shift over to proof of stake?
I'm not a fan of proof of stake. I believe proof of stake is the existing system that we have today, which
Hmm.
I'm not a fan of. The Cantillon effect. If your listeners or your
Yep.
viewers are familiar with that, and so whoever has the most votes gets the most power, gets the most control. It's very centralizing in nature. I believe we're witnessing a technological revolution. There's one about every 50 years. There's only been five. I believe we're witnessing one right now. But the innovation, the technological revolution is decentralization. We've never had a technology that does this. And POS works the opposite to where it starts centralizing things. Is there a
Yeah.
use case for it? Sure, maybe. I mean, it's being used. Will it continue to be used in the future? Sure, maybe. An iPhone was cool, but it wasn't a revolution. It took a computer phone, put them together. So it's nothing new. It's a sort of like the existing system that we have today. The shareholders get the most votes. Great. So Facebook shareholders get the most votes. Cool. Bitcoin is different in a system where there is no votes, there is no governance, and it doesn't centralize based off of that.
Yeah, I think to your point is that if you look at decentralization versus centralization, and this is something I am concerned about with Ethereum and other projects out there that are proof of stake, because it does represent an opportunity for that to occur versus what we do see with some of the things around Bitcoin and full decentralization and how that might play out, especially in the regulatory environment. So a lot of that still plays into it, I think, for sure. This is one coming, just more of a statement from Jeff Fries. We're closer to a cashless society than we think. There are a handful of retailers who no longer accept cash, and I think cashless maybe within 20 years. So again, back to your point, that's still a long horizon, but definitely one that I think a lot of people are looking. Hey, that's within our lifetime. It's very possible we could see it for sure.
Yeah, yeah. I mean, 100 years ago, we didn't have cars, right? I mean, like things happen pretty quick. I know there's
Yeah,
a store right down the street from me where they don't take cash. I believe it's illegal to do that in the United States, but yet I've still seen merchants
it
doing
is.
it. And
Yeah.
yeah, it probably continues to grow, I would imagine. We did see in the UK, I believe just last week, the top two largest denominations of their bills, they announced you have 1 week to
To
turn
turn them in.
all those
Yep.
bills in or they're bad. Like, what if I was on vacation? Like, what, all my money just goes bad? Like, and so
Yeah.
I think we're going to continue to see that happen.
That is going to be interesting because that would be possibly another move that I think the U.S. government would do with some of our high denomination bills for
Sure.
sure, which
What
is
India did in
keeping from hoarding
2016,
cash.
India did it in 2016, where they got rid of their top two bills,
Hmm.
and you basically had, I think they gave you 30 days to turn in your money, and then of course when you go to turn it in, they want you to show you all the documentation of where you got that
Hmm.
money, and let's see
What
all
tax
your
that?
tax receipts. And if you
Yep.
don't have all your documentation and you haven't paid all your tax, then we just take all your money. And I would
Yep.
imagine this UK thing could be something similar. There's probably a lot of people operating in let's call them gray markets or parallel markets that probably have built up a lot of cash. And this is a way for them to cycle it through the system. Hey,
Oh
show us
yeah.
what you got and
Yeah.
show us why you got it. And if you can't prove it, then give it to us, kind of a thing. But I think we'll continue to see that happening.
Man, there's so much. This is a very interesting time we live in, Mark, for sure. Always fun
Super,
having
super
you
interesting.
on the show. Thank you so much for stopping in today. We appreciate it.
Thanks, Paul. Appreciate it.
Yep. All right. So you guys are tuned in over on the podcast side of things right now. Maybe you are, and that's okay. We love to have our podcast listener over on Spotify, iTunes, all the places you catch these. But really, the best place to catch a lot of these charts and some of these deep dive interviews are right here on the YouTube channel. So just jump over here to YouTube, search Paul Barron Network. You'll find us. And just hit subscribe and like on a few videos. That's the number one way that you, as an investor, or maybe you're exploring Bitcoin for the first time, if you like this video right now, you're going to help someone behind you discover it. And that to me is the best gift you can give for people who are really trying to understand what blockchain is, how cryptocurrency is going to work, what Bitcoin is. All of that matters based on how you guys kind of spread the news. And liking a video is the first and best step you can take. If you're not in the Diamond Circle, make sure and jump in on that as well. We'll leave a link below. It's very easy. If you guys want to catch me out on Twitter, it is @Paul Barron. We'll catch you next time right here on TechPath.